Hey guys, welcome back to Reserved Investments on YouTube. It's kind of interesting how things turn out. Like, I wasn't supposed to record this video today. Let me explain. Right now, as I speak, the Central States coin and currency auctions that are being hosted by Heritage Auctions are going on live on the internet. So every time a major coin or currency auction comes up and it's hosted through Heritage, I pretty much log into my computer and I wait and watch the auction in real time, and I bid on items that I want to get. Well, in the year 2021, with a lot of asset prices soaring in value, obviously collectible coins and collectible currency are not immune. So really, I took some time to watch some of the incoming bids on some of these pieces that I had my eye on, and literally coins and currency that you could have got last year, in the year 2020, like right before the pandemic hit, for roughly $2,000 or $3,000 are now selling for $4,000, $5,000, $6,000 or more in certain instances. So that's really what prompted me to record this video at present time. Today we're going to be talking on the subject of inflation hedges and how this relates to the antiques and collectibles trade, because there's a lot of people out there where if you get into a hardcore discussion with a lot of people that appear to be versed in the overall antiques and collectibles trade, at some point, a dealer, an investor, another collector, someone's going to come to you and they're going to say, well, gee, little Timmy, if you put your money in this particular item, it's going to work as an inflation hedge. So if inflation starts to go crazy like it is in 2021, this particular item that you are investing in collectible form is going to be worth even more money in the future as long as inflation continues to be a threat. Now, we do have to discuss this, because there's some truth to that, but there's also a lot of incorrect information being put out by the overall antiques and collectibles trade on average regarding that particular topic. And I want to be sure to clear the air on this, because I think a lot of people are getting led astray when it comes to investing in some of these markets. They're stating, well, it's a good inflation hedge. And I don't even think that a lot of these people that are repeating these terms understand really what they mean. So there is going to be some financial jargon in this particular video, and rest assured, if you are not well versed in finance or business or economics, I am going to break it down for you. This is going to be a very introductory video. It's going to be a short video. If you want me to expand on these topics, just let me know in the comment section below, and I will gladly take the time and we will go more in depth on this particular talking point. First, what is an inflation hedge? Well, an inflation hedge, the best definition that I can come across on the internet to help explain this talking point is it's an investment that is made for the purpose of protecting the investor against decreased purchasing power of money due to rising prices of goods and services. Now, this is important because what I don't think people realize is you can't just give somebody free money. There is no such thing. And again, I'm remaining politically unbiased in this particular video. You guys know my political views are well known. I am more on the left side of the equation. You can hate me. You can unsubscribe from the video. You can leave me a nasty comment. You can send me a horrible email. I don't care. That's really where my political beliefs fall. But you must understand, there is no such thing as free money. And it doesn't matter if we're talking about sending everybody a $1,400 check, or if we're talking about increasing the amount of unemployment benefits you're going to receive, or on the other end of the spectrum, and this is something that sometimes a lot of the people who talk about this don't mention, or you give certain companies a more preferred tax treatment to the point that they spend less in taxes overall. That also can cause inflation. So it's not just the subject of talking about printing money. It is also an unfair or an advantageous tax system that benefits certain individuals or certain corporations. So I want to make that very clear, because every time I hear somebody talk about inflation, they only talk about free money being printed by the government. But there are other ways to give perks and subsidies to certain individuals and certain corporations, and that too can cause inflation. So it's very important that we look at this from an unbiased standpoint, meaning I'm not looking at this as an independent. I'm not looking at this as a Democrat. I'm not looking at this as a Republican. And I want you guys to be aware of that. I'm coming at you just with the truth. These are economic truths. Now, the ideal investments for hedging against inflation include those that maintain their value during an inflationary period or those that increase in value over a specified time period. Now, obviously, a lot of people come to me and they say, hey, Sean, I want to protect my money against inflation. And I don't mean this to sound smart. I don't mean to insult anybody out there. But the first question that I ask back at them is, number one, do you have any money to protect? And what I mean by that is there's a lot of people that the way that our society, our capitalistic society is structured, they only look at assets when we talk about inflation. They don't look at liabilities. You have to take the two wholes together. So for instance, if you have $50,000 in student loan debt and you have $10,000 in a savings account, and you come to me and you go, Sean, I'm worried about that $10,000 that I have sitting in a savings account. I want to protect it due to inflation. I get where you're coming from, but overall, you have $50,000 in student loan debt. If we take $50,000 and subtract 10 from it, you're still negative 40. You still have a negative net worth. This is one of my pet peeves when I start talking finance. There's a lot of people out there that come up with all these wonderful theories or ways to preserve wealth. And when I see their balance sheet on paper, meaning assets minus liabilities, they have a negative net worth, or the net worth is close to zero, to the point where they have nothing, and they're worried about inflation. Now, to be fair, before I get ripped through the mud in the comment section, I understand that, yes, for the average person out there that is still struggling to get by, obviously, inflation is a threat. And even if you do have, if you're dumb enough to have right now $1,000 sitting in a savings account, paying you what? 0.0000001% interest, I understand that you want to protect it. So I'm not attacking you in that regard, my brothers and sisters. I want to be very clear on that. But overall, when you talk about wealth preservation, you have to have wealth in order to put this in play, for it to work for you fully. That's just my opinion. Now, I'm also not going to go into the topic of debt. Obviously, debt can work for you or against you, depending on what the inflationary or deflationary environment is at any time in an economy. If you don't know what I mean by that, don't worry about it. It's not going to be the main talking point in this video. Now, traditionally, the investments that people have used to protect against inflation have been gold, silver, precious metals, obviously, and also real estate. And to a lesser extent, people like me, I like to use stocks to protect myself against inflation over the long term and even over the short term. Because once inflation hits, it causes asset prices to rise. That's what's happening in the year 2021. That's why stocks, bonds, mutual funds, crypto, gold, silver, real estate, antiques, collectibles, a lot of these categories are rising in value because of inflation. Now, this is very important. This is where we start talking about antiques and collectibles. Now that we're almost 9 minutes into this video, and most of the Timmys, Kimmys, and Poindexters have already gone about their day, and they said, you know what? Screw that guy, Sean, with reserved investments. It's taken him too long to get to the point. Well, I do have to divine the facts before I get to the point. If you're going to invest in collectibles and antiques to help preserve wealth, and you want to use it as an inflation hedge, you must understand that demand of those particular collecting categories must remain at the current level it is at, or it must increase for that to work to your advantage. So if you're going in to a collecting category at present time and you want to argue with me that, hey, I'm investing in Pokemon cards right now because I'm worried about inflation in the overall industrialized world in the year 2021. I'm going to come back to you and I'm going to say, understand, you are choosing a very speculative market in the overall antiques and collectibles trade to attempt to offset inflation at present time. You better hope that market remains at the level it is at, or more collectors come into that market and want to bid up the Pokemon cards that you are holding on to. Now, to be fair to my Pokemon collectors out there, I could have used every other speculative collectible category out there, whether we talk about vintage video games, Magic the Gathering, even Marvel Universe trading cards at present time. So you better hope, if you are investing in one of these markets in the overall antiques and collectibles trade, and you want to invest in that market as an inflation hedge over the short term or over the long term, demand must remain constant, or it must increase at the levels of what it is now for that to be a truth. Now, this is what most antique dealers, this is what a lot of unsophisticated investors and speculators get wrong about the antiques and collectibles trade. If you invest in the wrong market, it is not going to be a good inflationary hedge for you. For instance, if you come to me and you go, hey, Sean, you know, I can get Western toy collectibles that hit their peak in the 80s or 90s right now for literally almost pennies on the dollar in certain cases. I want to go after these items as an inflationary hedge. Obviously, that is not the best use of your money if you want to preserve wealth. So you have to look at this from the standpoint of, are these markets going to hold over the next 5, 10, 15 years, or if you're investing short term, over the next 12, 15 months even. Now, this is why I like certain markets in the overall antiques and collectibles trade better than others, and I'm going to state it. Historical documents, traditional antiques, coins, currency, high-value artwork, collectible first edition books. In my opinion, those markets consistently have stable demand. As a result, they make a better inflationary hedge than a lot of your pop culture markets. Now, to be fair and address my critics, I'm not saying that great at comic books, great at toys, Pokemon video games, and Magic the Gathering are going to go to zero. But what I am going to tell you is, if you are buying these items with the idea that these items are going to be a good inflationary hedge and demand lessens in those particular collecting categories and cools off, guess what? You just defeated your purpose. So make sure, if you're going to tell yourself that you're investing in these markets as an inflationary hedge, you understand the risks. Because in my opinion, you want to go after either established or mature collectible markets for that particular purpose. Now, I know this is going to be a controversial video for the Timmys, the Kimmies, and the Poindexters out there. I'm going to get cut up in the comment section. They're going to go on collecting forums. Look at this guy. He's even tearing up the fact that we want to use vintage video games or Pokemon cards as an inflationary hedge. Yes, I am, because right now, those collecting categories are at all-time highs. We can't predict the market where they're going to be in the future because there's a lot of people already clamoring to collect those items because they consider it the new thing, the new investment tool in the overall antiques and collectibles trade. That's why I'm putting out this video right now. That's why I decided to record this video instead of bidding on a lot of items in the coins and currency market at present time through heritage auctions that are selling as a premium because those particular collectibles are proven as a good inflationary hedge. Do you see how 14 minutes into this video, I was able to circle it all the way back to the beginning and make it click? Because that's what's happening in the year 2021. Please learn from this. Please let me know your thoughts in the comment section below. Do I need to do more videos on this topic? Or are some of you okay? Do you go, you know what, Sean? I didn't even need to know this information. I already knew it. Thanks for watching and have a great night.